Welcome to the Hurst Trading Room. My name is David Hickson and this is a brief video update for the 14th of April 2015. Before we take a look at the markets, please make sure that you have read and understood these disclaimers. Now, this is going to be a very quick market update, I hope, and that is because I was reminded by a comment in Hurst chat that something that I intended to include in yesterday's video I had left out. It's a fairly important event and it has some fairly meaningful implications, and that is the 20-week VTL has been crossed in the S&P 500 and also in the other US stock markets. Now, a VTL is a valid trend line, which is simply a trend line which joins the troughs or peaks of two consecutive cycles, and it is further validated by adhering to some rules that Hurst defined. I won't go into greater detail here, but on the chart that you're seeing now of the S&P 500 is drawn the 20-week VTL, and let me quickly point out to you what makes it a 20-week VTL. It is simply joining the consecutive troughs of the 20-week cycle, and this analysis you will be familiar with because I've been showing it in previous videos over the past several weeks. And so because that trend line joins the low prices at the trough of the 20-week cycle, it is therefore a 20-week VTL. Now you will see that, of course, in between the 20-week cycle troughs, price remained above the VTL. A very interesting thing happened over here at the trough at the beginning of February, which according to this analysis is a 40-day cycle trough. Price came right down to the VTL and touched it, and I'm going to come back to that point in a minute or two. But the important thing is that the VTL is defined as the line that connects those two troughs, okay, the two 20-week troughs. Then we look at what happens to that VTL after the second trough, and as you can see, price came down and crossed below the 20-week VTL last week and a little bit the week before. Now that's a really important event. When price crosses below a VTL, you should know that that action has some implications. The implication when the VTL is an upward VTL, in other words, it joins two troughs and it is moving upwards across your chart from left to right. When price crosses an upward VTL, it tells us that a peak of the next longer cycle has formed in the market. So therefore, the meaning behind this move over here, where price crossed down below the VTL, the meaning behind that move is that we have seen a peak of the current 40-week cycle. Now that's very important, and let me just zoom out here and explain in a little more detail what the implication of that is. The next longer cycle to the 20-week cycle in our nominal model is of course the 40-week cycle. And here we go at this scale on the chart. You can see what the 40-week cycle is expected to do. The 40-week cycle last formed a trough in the middle of October 2014. There can be a little argument about that. Most analysts would agree that that was a trough of at least 40-week magnitude. It might have been a trough of 18-month magnitude as well, as you can see on this particular chart. The 40-week cycle, of course, is expected to rise up and then come down again to the next trough of the 40-week cycle, which is shown on the chart by this nest of lows. There is the nest of lows for the 40-week cycle. You can see that it is expected to occur in about July, perhaps early August of this year. What people in the northern hemisphere would consider to be their summer, but I tend to avoid speaking about troughs occurring in the summer because as somebody who comes from the southern hemisphere, that always used to confuse me. So the next 40-week cycle trough is expected in July or early August of this year. Now, what I've drawn there, that blue line, is of course the idealized path of the 40-week cycle. Price itself is not likely to take exactly that path, of course, but the fact that prices dropped down below the 20-week VTL, as you can see over there, indicates or tells us that the 40-week cycle peak has formed in the market. That is the meaning of price crossing a VTL as defined by Hurst. Now, that's really important because, as you know, I am expecting the peak of a very long cycle. But even if you aren't expecting a peak of a very long cycle, it is important to know that a peak of the 40-week cycle has occurred in the markets, because what that means is that we are now on the downside path of the 40-week cycle, which means that our profits are going to be made to the short side. In other words, we will make more profits selling short than we will make trading long. So, of course, we know that cycles form M shapes in the markets. So the M shape, let me just clear all those lines, and the M shape of the 40-week cycle would be the move up to the first peak, then the move down to the 20-week trough in the middle, and then a move up to a second peak, which is obviously underway at the moment. It will then form its second peak, somewhere over here, and then of course it will move down into its trough in July or August of this year. Now, the fact that price has crossed below the 20-week VTL tells us that the peak has formed in price. In other words, we have seen the highest price that we are likely to see in the current 40-week cycle. And so therefore, the second peak, this sort of circle that I've drawn here, where we're expecting the second peak of the 40-week cycle to form, is likely to form at a lower level than the previous peak. And that is what price crossing that 20-week VTL tells us. That's really useful information. You will know from the video that I recorded yesterday. Let me just display the FLD again here. The video I recorded yesterday, I spoke about the next trading opportunity being a short trading opportunity as price crosses down below this FLD. Okay. And I also mentioned that if we have here a trough of the 80-day cycle, then we need to be a little bit cautious about entering into that trade. But the fact that price has crossed down below the 20-week VTL gives us extra confidence in making that short trade, because it does tell us that we have seen the highest price. Therefore, in theory, the highest level that the current price move can take us to will be a little bit below the previous high. Okay, let's zoom in a little bit. Highlight that VTL just to describe something. There we go. So, in other words, the fact that price has crossed below the VTL tells us that this bar over here, which was towards the end of February, is therefore potentially, or theoretically I should say, the highest price that we are likely to see in the current 40-week cycle. Now, I say theoretically because VTLs are not, in my experience, as reliable as FLDs. VTLs are very closely based on the analysis that you've performed, and it's very easy to make mistakes with VTLs. Also, I have seen times where VTLs have been broken to the downside or to the upside, and price then doesn't, in fact, fulfill its destiny as described by Hurst's definition of the VTL, which is that the peak has already formed. So in theory, we have seen the peak, the highest price of the 40-week cycle. It's not entirely reliable. It's not an absolutely 100% guarantee. But certainly it is something very important to bear in mind. Now, let's speak a little bit in detail about price crossing this VTL. When price crosses an FLD, you know that we require median price, which is the mid price between the high price and the low price, to actually cross the VTL. The FLD, I beg your pardon. VTLs, however, are a little bit different. According to Hurst's writings in the Hurst Cycles course, when price touches and breaches that VTL, it has crossed the VTL. We don't require median price to cross the VTL. And so, in fact, we could have said price has crossed the VTL over here on that bar there, because you see price came down below the VTL. It in fact closed at the level of the VTL, as you can see. The next day it also came down a little bit below the VTL. That in theory is price crossing a VTL. But again, there is a difference between theory and practice, and I tend to take the theory with a little bit of a healthy dose of skepticism. And when price touches a VTL like that, I don't immediately jump to the conclusions that the VTL has been crossed by price. However, if we display the median price on this chart, which we can do very easily, there we go, that is the median price. You can see that the median price has definitively crossed that VTL as well. Now, price came down below the VTL over here in the 3rd week of March, and it spent pretty much the whole of the 1st week of April below the VTL. I'm sometimes asked, does the fact that price has now popped back up above the VTL, does that disqualify that price cross? Does that mean the market is saying, oh, sorry, that was a mistake, I didn't really mean to cross the VTL, and therefore we should ignore it? No, not at all. The fact that price has crossed the VTL means that that VTL has been crossed. It has been breached. There's nothing we can do about it. Price has, of course, bounced back up above the VTL, and that is something that you will often see. But it doesn't disqualify that price cross. It's a very important thing. Now, the final thing I would like to say in today's video is that, of course, here we are looking at the analysis with the 20-week cycle trough phased in the 2nd week of March. All right, and that's something I've discussed several times in previous videos of mine. But as you probably know, there is also a strong possibility that the 20-week cycle trough formed at the beginning of February. The jury is still out, in my opinion, as to which is the correct position for the 20-week cycle trough. I keep changing my mind about which one is correct, which, again, a quick reminder, doesn't really matter in terms of my trading. I'm still able to make confident trading decisions. But here is another valid analysis, which is that the 20-week cycle trough formed at the beginning of February. Okay, notice that I've had to pin several troughs in order to achieve that analysis, which might be a sign that it's not the better analysis, but it is still a very valid analysis. Where is the 20-week cycle VTL according to this analysis? It is, in fact, in exactly the same place. Isn't that extraordinary? And I love it when that happens, when I've got two possible analyses, but the VTL's in the same place. How is that possible? Well, I mentioned earlier that on the 2nd of February, price came right down and touched the level of the 20-week VTL according to the other analysis. And in this analysis, that was simply the trough of the 20-week cycle. And so the 20-week cycle VTL is the line that joins the two consecutive troughs of the 20-week cycle, which are those two troughs that I have circled. That is the 20-week VTL. And so if we zoom in on this chart, we see exactly the same situation on this chart, which is that price has crossed down below the 20-week VTL. It breached it there on the Thursday, straddled it on the Friday, and then really dropped definitively down over the Easter weekend. And so again, according to this analysis, price has crossed down below the 20-week VTL. So in summary, because price has crossed down below the 20-week VTL, it has breached that VTL to the downside. Don't worry about the fact that it has bounced back up above the VTL. The fact that it has breached the VTL tells us that, in theory, the peak of the 40-week cycle has formed in the markets, which means that the market is going to be pretty much moving downwards. We are on the downside of the 40-week cycle. And let me just zoom out and show you the 40-week cycle according to this analysis. We get a slightly different 40-week cycle because, of course, of the different position of the 20-week cycle. But here you can see the nest of lows for the 40-week cycle. And so the fact that price has crossed down below the 20-week VTL indicates that the peak has formed. We do not expect a higher price within the current 40-week cycle, and ahead of us lie 2 to 3 months of downward movement. Therefore, our trading profits in the US stock markets are most likely to be on the short side. Thank you very much for joining me for this quick video update. Please let me know if you enjoy the format of a quick update like this, where I deal with a single aspect of a single market. I find it quite interesting. It makes the video a good deal shorter. And so let me know if you enjoy this format, and I will do more of these quick video updates. I wish you, of course, profitable trading, even if it is going to be on the short side, and I look forward to seeing you next time.